A very warm welcome, everyone. My name is Nicholas Tan from Kenanga Futures Sdn Bhd. Thank you for spending your precious time to join our webinar today. It's a joint collaboration with CME Group in our effort to create awareness and provide education on listed derivatives to the participants. We have returned with our nationwide campaign Into the Futures. Stand a chance to win prizes worth up to 30,000 ringgit when you trade Malaysian, US and Hong Kong futures contract from 1st August 2020 until 31st October 2020. Please take note that futures and options trading involves substantial risk due to leverage factor and may not be suitable for all investors. This webinar is purely for educational purposes. Kenanga Futures Sdn Bhd accepts no liability whatsoever for any direct or consequential loss arising from any use of the content of this webinar. So before we start, we would like to take this opportunity to invite you to Kenanga Futures' next webinar, which is on 15 October. This is a Bahasa Malaysia webinar. The title is about Pengenalan kepada Niaga Harapan Minyak Sawit Merah, which is FCPO. An invitation email will be sent to you. Don't miss out. Please register once you receive the email. Next, if you have any questions from our speaker, please feel free to post your questions through the Q&A box on the right side or the bottom of your screen, and he will attend to your questions after presentation. Today we have Mr. Chong here, and he's going to share with us about assessing the fundamental of soybean complex. So without further delay, I would like to kickstart our webinar by welcoming our speaker today, Mr. Chong. Chong, over to you.
Okay, very good evening to all. Welcome abroad for another session of webinar covering soybean complex. Just to confirm, Nicholas, can you hear me?
Yes, loud and clear.
Okay, thank you. Okay, soybean complex basically consists of soybean itself and then followed by the soy meal. After you crush the soybean, there's two byproducts, which is the soy meal and also the soybean oil. So that is, as total, is referred to as a soybean complex. Okay, disclaimer as usual on the confidentiality of the information here. Okay, the agenda today is, first thing is we are going to assess so far what has been the factors driving soybean complex prices. And I'm going to show you quite a lengthy slide on the first thing is on the factors and also some supply and demand data, fundamental data. Then after that, we are going to get ready and try to assess what will be the potential fundamental impact that could take place that is going to impact soybean complex prices. Then after that, we are actually going to assessing the relationship between soybean with CPO and also other important products. We'll try to see what is the relationship there. So hopefully you have, after the webinar, you will have a clearer picture on these widely used commodity and the futures contract and able to treat it with a more better knowledge and also well prepared for it. Okay, first thing on the factors. Okay, currently what's happening is that is driving the soybean complex prices up will be because there is a dry weather taking place in Brazil, where Brazil is one of the biggest soybean producer, and there have been no rainfall there is been no rainfall that's causing delay on the planting season. So that is actually one of the factors that's squeezing the potential supply of the quantity in terms of soybean. And this will be the news because due to dry season, there is less rainfall in the farming area, causing delay in planting of the soybean. And this is the news that I just received this morning from Bloomberg, saying that the soybean price has went down last night because there has been some rains accelerating in the planting area, causing the soybean price to come down. So that is the current state of affairs on Brazil itself. And also recently we have this Hurricane Delta in New Orleans, where the biggest US agriculture commodity related export ports of the entire US. Okay, I will take a little bit of detour here to covering these ports, some facts on the New Orleans port. Okay, this is the news from Forbes on the Hurricane Delta that hit Louisiana, where New Orleans is located. Okay, actually, New Orleans port is located just here at the mouth, at the bottom of the south of America, where, as you can see that this is the map of the United States, and this area basically is the Great Plains, where all the most commodity agriculture planting area will be here. We call this the Mississippi Basin. Basin basically means that the available of rivers and supply of water to the plants, and this is where all the planting area is blooming because of available of water source. Okay, and what happened is that when after the crop has been harvested, one of the way that to transport those crops to the exporting ports is via the Mississippi River. So and it will reach New Orleans for exports. And next will be the some facts and figure on the New Orleans agriculture port, exporting ports. Okay, this it will be the largest in America for those agriculture related. As you can see here is the market share. This is I can only get 2011 data. I'm sorry, I have tried to search for as many as possible, but that's the only available from the USDA. And this New Orleans port is the largest in terms of agriculture trade product. The export, the shares is basically largest compared to other ports. Okay, and this will be the top commodity that export through the ports. First thing will be, of course, soybean, about 63% US share, and then followed by others important agriculture product. And this will be the top destination that this port export to, mainly China, Japan, Mexico. Okay, and then this will be the importing products. Okay, interestingly, our palm oil is also imported via this port, and you can see that the percentage from Malaysia is also significant in this in terms of the imports. Okay, beside the Hurricane Delta in the ports that is affecting the supply, the supply of exporting soybean out of US. Other than that, will be there's been quite a huge demand, and US, especially from the US, it's been recording quite encouraging export figures so far. This is by USDA. As you can see, that is near is actually 4-year high actually, and with significant increase, especially from China, that is driving the current bull run in soybean complex prices. Okay, of course, on the other side, it will be China shopping spree, because this is the latest data just managed to pull out from Reuters. You see, compared to year-on-year, last year, same period, January until September, there is actually a 15% increase on soybean imports by China. Okay, and then of course, another factor that is helping indirectly helping these soybean complex prices upward will be, of course, the weaker US dollar. As you can see, US dollar have an inverse relationship with the soybean complex prices. This is US dollar compared to soybean and soybean meal. The next one will be US dollar compared to the soybean oil prices. Okay, of course, fundamental, we cannot escape the supply and demand data. Okay, just a general idea. As you can see, this is the global soybean productions. As you can see, it has been on a consistent increasing trend for about 8 years, mainly covered by US, Brazil, and Argentina. And this will be the key area where we focus, which is the American continents where the soybean is being produced, if geographically, if you want to. Okay, this will be by country. As you can see, Brazil is the largest productions, followed by US, Argentina. Other than that, it will be actually quite insignificant compared to the top 3 producers of the world. And in terms of exporting, Brazil export the most, also the same, followed by US and Argentina. Okay, this is by country. The next few slides will be all on charts about the facts and figure on the supply and demand data. Okay, so as you can see that the thing here is that for United States, the thing is where they produce quite significant soybean, but their domestic consumption is also about more than half of what they produce. So meaning that the internal domestic demand is also actually quite consistent in terms of taking up the supply from the soybean production. So and then the remaining left will be for exports, as you can see. And this is the weekly export data on soybean, followed by you can see that the soy meal and soybean oil will be less here. Basically, because why is normally when those importing countries, when they import, they will most likely to import the entire soybean rather than the byproduct of soybean oil or soy meal, simply because they can actually import the entire beans and then crush it in their respective country, and then from there they can produce the soybean oil and also soy meal rather than to import directly the byproduct. The only country that didn't import much soybean but import the byproduct will be on India. So later I'm going to cover that. Okay, this is the USDA WASDE report. So this is actually a monthly estimate report by USDA, where it will show you the estimate as the month progress. As you can see here that the production is as of now, as of September, is actually still by far a bit lower compared to last year. But in terms of export, it is quite closing here with still 2 to 3 months to left compared to the entire previous period. So as you can see that we have a slower production, but with the maintaining pace of export pace here. Okay, in terms of Brazil, they produce quite a lot of soybean, but the domestic consumption is far more weaker as compared to the US. They consume less than what they produce, and then they are mainly focused on export the soybean oil to the buyer their soybean. And you can see that on this year, it's been on the roller coaster ride for Brazil soybean. The first half will be on the uptrend, but after that, ever since it started to weaken down. And one of the reasons is because thanks to the weaker US dollar, and that's resulted US soybean oil became more attractive. Okay, next will be on Argentina. And for Argentina, they basically consume most of what they produce in terms of soybean, and with a little room left for export, as you can see. Okay, similar to Brazil, the export has been first half is on an uptrend, and then slower exporting volume on the second half. Okay, now on the demand side of soybean, China is the ultimate consumer of soybean for the entire world due to first thing their populations, of course, and then followed by the EU zone, then followed by Mexico. So this is the top 3 country. Okay, China in terms of they produce less, meaning they do actually plant soybean, but it's just that the volume is not that significant, so they import a lot, and their domestic consumption is actually quite, most of the cases outpace the volume of imports. As you can see, there is a strong demand for soybean in China. Okay, this is for soy meal. Of course, they didn't import. They import, but relatively significantly lower volume, because they import the entire bean and produce themselves from the soybean. So this will be, as you can see, the domestic consumption is still on a steady uptrend and is being close tying with the production of soy meal. And this will be soy oil. Similar, as you can see, in the case of soy oil, they actually consume more from what they produce or from what they crush from the soybean, and resulted they need to import some of it to cover the demand for the domestic consumptions. So that's basically the general idea on the demand for soybean demand for China. Okay, so this will be the Eurozone. As you can see, very strong domestic consumption. They consume more than their imports, but in terms of the trend, it's been quite steady and actually regulated to quite stagnant or statics, without big drastic ups and downs in terms of consumption and imports. Okay, and this will be on soy meal. So very strong domestic consumptions. Then this will be on soy oil, and this will be on the produce and then imports, and also domestic consumption is lower as compared to the productions. Okay, now this is the soybean for consumption for India. They didn't import a lot of soybean, but they didn't but they import a lot of soybean oil. So basically, as you can see here, their domestic consumption is very strong, is on a steady uptrend, and is stagnantly high, and there is big gap in terms of the import and production compared to the domestic consumptions. Okay, Mexico. Soybean oil, another very high volume user of soybean oil, Mexico. As you can see, also on a steady uptrend. And another country for soybean oil consumption, high soybean oil consumption, will be on the Iran. Okay, but it's been slowing down since and been static for the past 6 to 7 years. Okay, another factors that is driving demand for soybean will be the livestock production, because as you are aware, you might aware that soybean is being produced to soybean oil and soy meal, and soy meal majority of percentage of soy meal are being channeled to be a livestock feeds to them. So basically the production of livestock related volume will actually have a direct impact on the demand for soybean. Actually, as you can see that this is the cattle productions globally. As you can see, it's been quite steady. There is, and demand for beef is quite consistent over the years, and with the higher producing country will be India, Brazil, China, and United States, followed by EU, of course. And another type of livestock will be, of course, the swine. As you can see that there's been a slowing down in the current year. One of the reason is not because of demand for swine is low, but it is because of the swine flu development in China that is prolonged. It's like more than a year that is the main reason that drag the production, the global production of swine. Okay, now we are going to the second agenda, where we are going to assess, get ready for what is the potential fundamental impacts that could cause a movement in the soybean complex prices. And when we know that, and if we encounter there is news related to the topic, then basically we actually have a rough idea what is going to happen to the prices of soybean complex. First will be, of course, you cannot escape where this is the planting season and the harvest season for the respective producing country, and we have to look at the weather development of this country, especially when it is near the sowing season and the harvest season. As you can see that basically the category will be the north and south. As you can see that for the north side of the planet, basically the sowing season is at the first half of the year and harvesting season will be on the second half. And on the opposite, on the southern part of the world, basically is the opposite, where the sowing season is happening on the first half, then only harvesting season will take place on the first half of the year, then followed by sowing season on the second half. Okay, this will be the area where if you see like some significant prolonged development of dry, high temperature, or prolonged rain or flood, and etc., that's related to weather, that is going to impact the supply of soybean oil, and then will press to some extent is going to give pressure to soybean complex price upwards. Okay. And of course, in terms of whether this is actually a tool that you can use to check on the weather development in the US. Okay, as you can see that it will be the website, this covering US, United States weather, where it is on a weekly basis. You can actually see the projected temperature, what is the area that is with rains. Okay, then next will be the temperature of the current area of Great Plains, especially this area where most of the Great Plains, where most of the planting of agriculture take place. Okay, then of course there will be like natural disaster or accident that might happen, like example locusts, where we have locusts developed in major part of Africa that is resulted a very bad harvesting on agriculture products in the Africa. So and then of course another main category is when you have harvested the crops, then basically you need place to store, and we have to also aware of the storage of the location storage of the crops, and where if there is a large storage area that is being hit by, let's say, fire, earthquake, and also some utilization number on the storage could also be helpful for you to have a picture, a roughly idea of what is going to happen on the supply side. Okay, of course, on shipping disruption also is going to affect the supply line for soybean. Of course, like ports and Mississippi River, if there is a drought and resulted the water level is low, where they cannot transport the soybean, is going to affect the soybean prices also indirectly. Okay, another major factor will be on the fertilizer supply and also prices that you might need to pay attention to know the whether there is sufficient fertilizer to supply to the farm, so that they can apply it to the planting areas to ensure a good production or harvesting season. So one of these come to my mind when there is the Lebanon factory explosion, and where the factory is also producing chemical that is used for fertilizer productions. So, and then next will be on disease related. Of course, this can be few category. Of course, first thing will be farm related disease. There could be new worms or new kind of disease that attacks agriculture planting area that could happen, and the current pesticides might not be able to cure the plant. So this could actually potentially affect the supply side or the production side of the agriculture. And then on the other side will be, of course, human related disease. This is going to affect the demand side of agriculture product, like COVID, what is currently happening, and also other related outbreak like flu or influenza. Okay, another one will be, of course, livestock related, like swine flu, bird flu, or mad cow disease that you might need to pay attention to. And if there is disease in this livestock related area, then it could potentially result a less demand for soy meal. Of course, nonetheless, geopolitical, as you are aware, we have a US presidential election coming near, about 3 weeks to go. Okay, so both candidates will have different kind of trade policy, and especially towards China. So there will be a different kind of policy implemented if the different candidate won the election. So of course, as you're aware, Trump will still pressing on the current trade deals with the current condition that he demanded from China. But on the other side, if Biden wins, of course there will still be a trade war, but it will be on a soft, what you call this, reduced scale, or maybe like a softened scale. So that could also change the way China buying from US, especially agriculture products. And also trade war, this one is not just between US and China, it is also between those country, major import country and major export country relationship with their trade partners. Of course, this could actually drive price up or down. And then next will be the rival alternative product prices. Of course, like now we have this the Argentina latest news will be they actually approved the bill to plant this genetically modified soybean. So if this will be this roll out and becomes a mass success, so this is going to affect the non-GMO soybean productions, and also the supply will turn up to be more, of course, because it's GMO, so it could be higher resistant to disease, and also with higher yield. So this could also potentially affect soybean prices. And another, of course, as market goes on trend, there will be alternative products popularity. Maybe like all of the sudden, people might not like to consume soybean related byproduct like soya milk, and they switch to other more healthier or more fiber rich drinks or whatever, or other more healthier agriculture related product. This could also affect the demand for soybean oil. And also what we have here is the alternative protein feedstock, and this has been getting popular, where they can actually produce rich protein livestock feeds from fly, and it is gaining popularity, and it is more sustainable, and is also environment friendly. So this will be another possible category of possibility factors that you might need to watch. And also, of course, not the less edible oil rival like soybean oil, rapeseed oil, and other related edible oil prices. Okay, and here we are going to assess the soybean complex prices relationship. Okay, of course, the ultimate the topic will be on soybean oil related to crude palm oil prices, but I think that other products prices relationship is also important, so I include it here. Okay, and so this is the just a quick peek. This will be the current uptrend. As you can see, soybean is on the uptrend currently, and soy meal price also currently trading on the uptrend. And as for soybean oil, it has reached a peak and now is on a consolidation mode, but still overall is still within the uptrend channel. Okay, in terms of core relationship, this is a core relationship that I managed to pull out from Bloomberg, and this is on a daily basis. Okay, of course, when you compare relationship for the past, this is a period of 3 years, about 3 years. So and if you compare the daily correlation, of course the significance is less because it's on daily basis, so you might not see some significance here. But nevertheless, if you are intraday, so this will be the category of product that you need to pay attention to if you treat soybean complex prices. Of course, the interrelated soybean complex have the higher correlationship, followed by, of course, KO3 will be the crude palm oil prices. We have almost 47% relationship. Okay. And then other commodity prices will be the corn and wheat. So you have a very high relationship also, especially the corn, because corn can also be produced to become cornmeal and also corn oil. So it is quite a similar product actually. And then lowest correlation will be the wheat in terms of agriculture. And then this will be on the currency. Okay, this is BRL is Brazil real currency compared to US dollar movement. We have about 20% relationship. This is the renminbi US dollar relationship. And the last one will be live cattle prices relationship. Okay, next this is the weekly correlations. As you can see, when you compare on the weekly, and this is about 10 years period, you can see that the relationship will actually increase in significance. As you can see, still the main same category. Now this time there is this ZRO. Basically, ZRO is actually Zhengzhou Rapeseed oil. This is a commodity trade of rapeseed oil traded in Zhengzhou Exchange, China. So this will also another edible oil have some relationship with the soybean oil and also soybean. And then of course corn and wheat, and then the Brazilian real, and also this is the US dollar index movement, also has inverse relationship of about 22% with soybean complex, with soybean oil, sorry. Okay, next this is the monthly. As you can see, when you compare a longer period with longer time frame, then you can see the significance become more obvious. You can see more and more products have a relationship with these soybean complex prices. Okay, now the new one in the picture will be PAL. This is actually palm oil traded in Dalian Commodity Exchange, China. And CL1, this is actually crude oil prices. We have a 31% relationship with soybean oil. This, sorry, I forgot to elaborate. This is S will be soybean, SM1 will be soy meal, BO1 will be bean oil. So this is, sorry, I forgot to explain that to you on the chart. Okay. So next, I'm going to explain to you on beta. So beta in investing, the meaning is that the sensitivity of prices that affect another commodity prices. So as you can see, the high beta here is, of course, crude oil have the ultimate highest beta in terms of daily, followed by, of course, crude palm oil and the corn and wheat, and also the live cattle prices. Okay, this is the beta for weekly 10 years data. As you can see, more and more product will come into highlight. So if you were an intraday trader, so basically you have to pay attention to the daily category where the crude oil will have a direct impact in terms of a price movement here. So you have to be aware of this actually. And I wish to highlight here, beta doesn't mean that if a product goes up, it will go up in the same direction, it could go the opposite. So you have to be aware of this. Okay, this is the weekly. As you can see, the higher beta will be on crude palm oil with soybean oil, and then crude oil with soybean oil, and then of course the agricultural product of corn and wheat. And this next one will be on monthly. See, corn and wheat have higher beta in terms of monthly changes. Okay, next. Okay, this is the price chart of the all three products combined together in one chart. As you can see, normally all the prices move in tandems. On general, there is actually a direct relationship in terms of prices among soybean complex prices. Okay, this will be soybean prices versus corn and wheat. Okay, generally it will be moving in tandem also, direct relationship. And then this is the soybean oil versus rapeseed oil in Zhengzhou exchange. Also a direct relationship. Okay, and this will be on crude palm oil prices compared to soybean oil prices. Generally, is still in a direct relationship. Okay, and this chart is actually this is actually a seasonal performance chart where I compare the 10-year average of, I take out all the 10 years monthly changes, percentage changes of crude palm oil and also soybean oil, and I found out that they are actually directly correlated, and there's only 2 months that is both prices go opposite, but this is also on a very small significance of about less than 2%, where it's happening in November and also September. So overall, it is actually moving in tandem, especially those having more than 2% movement. Okay, and this will be on the soybean oil versus crude palm oil price spread. Okay, what I did here is actually I take the prices of crude palm oil third month, Bursa Malaysia. I take the soybean oil second active month on seaboard. Then I do a normalization of, first thing, of course, I will convert the soybean oil where it is traded in pound. So I convert it into metric ton. And then also I will, after converting into metric ton, I actually convert the prices from US dollar to ringgit Malaysia, because ultimately the audience is basically Malaysian, so it will be more reflective. I've showed it in RM. So as you can see, generally soybean oil is trading higher side by side compared to palm oil. Okay, as you can see that generally is in the range of palm oil is actually on the discount of, most of the time will be near discount of 200 to 600 range. Okay, but now as you are aware, currently the discount is actually narrow to about 70 ringgit only. So here they reach actually an arbitrage opportunity where you can actually sell crude palm oil prices and then buy soybean oil price. Sell crude palm oil contract and then buy soybean oil contract. So in the hope that the spread difference will normalize back to about, let's say, even if it go back to like 200 negative 200, it will be quite a lucrative. It's quite a attractive trade actually, but of course the gearing you have to make it right in terms of the number of contract you are going to establish in both sides to do the arbitrage trade. But generally this is the what we are having now in terms of the price spread relationship between crude palm oil and soybean oil prices. Okay, and then this is some of our services to our clients if you are interested to open an account with us. Okay, in essentially currently we have what we have here in soybean complex as a summary will be we have a slower production or slower supply that is clash with picking up demand where especially China, which they have been buying a lot. So what happened is currently is in actually a very bullish uptrend. So in this kind of market movement, it is best to establish a more long position than short position, and if you are establishing short position, it will be very risky, and I'm not saying that it's wrong, but I'm just saying that you have to be really cautious and implement very rigid risk management when it comes to initiate short position in among these three commodity. Of course, there will be a point where the bull run will end, but as of now, it is still on the uptrend. So if you were to short, you have to be very cautious. Of course, that's my summary on soybean complex. On the other hand, if you still have further questions, you can still email to us. And my last word will be stay safe, maintain social distancing, and good luck. Happy trading.
Great. Thank you, everyone. Should you have further queries, please feel free to drop us at email at bcrm@kenanga.com.my, or you can email to CHONG directly. We appreciate you being here and hope that you enjoyed the webinar today. Please take a minute to rate our webinar, and your feedback is highly appreciated. Again, don't forget to register for our next webinar. Thanks again for joining us and hope to see you again in our next event. Stay safe, everyone, and good night.
What are you clicking?
Click KenangaFutures.com.my, Malaysia's leading derivatives broker.